Hello, chart watchers and Decision Point faithful. Welcome to this Thursday, May 14th Decision Point show. We are recording it the night before, just so you are aware. So you'll be seeing our charts as we're seeing them as of Wednesday night. But there's lots to show you. We have a lot to get on to with our agenda. So I just want to welcome everybody to the show and the Decision Point faithful. Boy, we appreciate you. So thanks for being here. So today's agenda, and then I will introduce my father. We're going to talk about trend channels and a double top. We're going to look at a selling exhaustion or an initiation, something that I've been paying attention to in the DP alert. We have some mixed signals going on that you might want to know about. And then I'm going to start us off, though, with a market deep dive. We're going to talk about what's been going on. I'll look at the 10-minute bar chart, and then Carl's going to follow that up with the 5-month chart. Lots to look at on the S&P 500. Then at the end, depending on how much time we have, I did the pitch on StockCharts TV yesterday, so I thought I would revisit a couple of those charts and give you a new one. I think it's kind of time to start looking at shorts. I know my scan results are getting huge amounts of results for my diamond dog scan. So I'm starting to peek over the edge there, and I think given the market weakness we're seeing, and we'll talk about, it might be time to do that. And then depending on time, we will look at the FAANG stocks, the FAANG Plus. But let's go ahead and get right started. Before I look at our scoreboards, though, welcome to the show, Dad.
Hi, glad to be here.
Yep, beautiful day outside. Have to enjoy it just from our backyards, though. One of these days we can venture out. I hope it's not too long into the future, but boy, California's having some problems with reopening, so we'll see. Anyway, let's go ahead, and here are our Decision Point scoreboards. Currently, all of them look pretty much the same. NASDAQ 100 clearly is doing better than the others with 4 buy signals right now. These trend model buy signals are all derived from the daily chart. So we'll be looking at daily charts, but you'll look at where the EMAs are located, and that gives you each of these. And right now for the NASDAQ, they are configured in a perfect positive formation with the fastest moving EMA on the top and the slowest on the bottom. That's what we want to see. But there are certainly cracks right now under the surface. We did end up getting the S&P 500 last week. We ended up seeing a new buy signal as the 20-day EMA crossed above that 50-day EMA. And I thought I had updated these scoreboards, but I know we do have, whoops, wrong way. Let's go forward. Sorry about that. I know I had updated them, but apparently I hadn't updated that image. But we do have an intermediate term trend model buy signal that did come in on the SPY on May 8th. And then on Monday, we got that buy signal to come in on the S&P 500. But everything else is looking correct. And here is our sector scoreboard. As you can see, we're starting to see a little bit of green peeking out here. But my dad and I did talk before the show, and we are seeing a lot of topping PMOs on the sectors. I think we even saw a couple of sell signals. Am I correct?
Well, not yet.
Not yet.
But all 11 sectors have overbought PMO tops, so that's pretty unanimous.
Yes, and that matches pretty well with the market, which is something we're going to look at. I just wanted to make mention, I did send out an email yesterday, I think it was. We have been doing the live trading room, Mary Ellen McGonigal and I, on Tuesday and Thursday mornings. We were doing it for free, but we are no longer. But the good news is for our Decision Point bundle subscribers, if you get both the DP alert and the Decision Point Diamonds reports, you will get the trading room added for free, and that's a $49.95 a month value. So basically you get that trading room for free if you subscribe to our DP alert and DP Diamonds. So highly recommend you go to decisionpoint.com and check that out. All right, so let's go look at some charts. I'm going to start us off with the 10-minute bar chart because that really tells the tale as to what's been going on here. And, you know, we had a rising trend. In fact, we were able to at one point show a rising trend channel in place. And we, of course, yesterday was not good. We were managing to hold on to that rising trend for just a little while, but then the market just gave it up, tried to consolidate and maybe make a turn back up. And then that last hour of trading was ugly, and it just continued on as we opened this morning. Again, tried to make a comeback here and landed after what is that? Looks like an hour and a half, huge decline. Did consolidate it, but now, and we are forming a double bottom, which is a positive formation. But overall, I'd have to say when you take this in total, that's more likely not a double bottom. That's more likely a reverse flag. And I would be looking for lower prices. Just the intraday chart. We did hold support though today at the previous low that we had on May 4th. So that was good news, but it's kind of combined with some bad news. Am I right? I'm going to pass the screen to you to add.
Okay. Right. So we've got, here we have a trend channel that's slightly rising. And one of the things I wanted to point out is that when you have a trend channel and when it's rising, and after it hits the bottom and starts up towards the top, if it turns back down before it reaches the top, that's a pretty good sign it's going to break down through the bottom of the channel. You can see the PMO top we've been talking about, and that's an overbought level at +2. That's pretty overbought. And this is really the first clear top we've had since the very bottom back in March. So to me, that's a bad sign, and I think it's going to end up being more than just a 2-day down and start up again. Notice we have a lot of volume today.
Yeah, that bothered me to see that decline and then follow it up. Because yesterday, I mean, we did get that big decline at the end of the day, but the volume numbers weren't, you know, climactic. Today, those numbers are not what you want to see on a down day.
Right. One of the things I wanted to mention, sort of taking a side trip here, but we talked about bankruptcies last week, and they had an announcement on one of the business channels that airlines are on the brink of bankruptcy. And to me, it's a typical way they run things to try to stir up hysteria. You know, bankruptcies, they may be on the brink of bankruptcy, but most likely we're looking at Chapter 11, which is a reorganization. Just basically put up stop sign. They're not sending any more money out until they get their act together. And actually, in this case, we're going to get more income. So anyway, just we're talking about bankruptcy. It's important to get the right context.
Absolutely. And then I do want to, you didn't mark it on your chart, but does look like we have that double top. Yeah. Right.
And then right here would be the confirmation line right against that low.
And if you recall on that 10-minute bar chart I just showed everybody, that is that May 4th low, and it managed to hold on to it today, but barely. So it does have that, I have the sense we're going to get that breakdown. And while the minimum downside target isn't, going to take us that low, that's a minimum downside target. And I haven't done the calculations there, but I think it would take us right about at that top from March, more than likely, a little bit lower.
Okay.
Excellent.
How about if we take a look at earnings quickly?
Absolutely.
This is, we've got a new update on that from the S&P spreadsheet, but this is what we had on April 22nd. This is what we have now. Notice the potential is just through the floor. And I just made some extra notations here. Back at the dot-com bubble, we got up to a PE of 33. And post 9/11, we got up to 47. And right now, we're at a PE of about 20, just a little bit above 20. And then notice that this was a PE of 89 when we had the bottom pull out there in 2007.
I remember when we looked at this chart in February, I believe, and you had those lines drawn on the side, the red, blue, and green, and they were much higher
Right.
as a projection.
That's what
Yeah, a lot of things have changed.
this is the top of the value range. This is PE of 20, overvalued, PE of 15, fair value, PE of 10, undervalued. That we would see undervalued again, huh?
I know. I think we've been looking at that chart and shaking our head for some time. So, you know, my sense is, and I don't know if you agree or disagree, but you know, the market was really poised to have a bear market decline. I mean, it really was. And I just feel like this pretty much pushed it over the edge. And then we went into this free fall because not only were we in a condition, an overbought price condition, now we had this virus to contend with as well. And the bottom fell out.
Well, supposedly the Fed head spoke today and said everything that we already know, but they blamed this decline today on that. But of course, this decline started yesterday.
Yes, long before those comments.
Reality may be coming home.
Yep. And I know I talked about it, I think on the pitch as well yesterday. It's now airing on StockCharts TV, and I am putting the link in the blogs today, and I will send it out to our free email list subscribers. So if you haven't gotten on that free email list, it's right there on our homepage at DecisionPoint.com. But one of the things we did talk about was just the weakness and how far could we possibly go down. But the main thing was, you know, that the market participants looking across the valley. And I think we mentioned this last week, Dad. But they don't seem to, they're looking at the other side and it's going to be so rosy and beautiful, but nobody's looking at how deep and scary the valley is between.
Yes, yes. It's like we're going to get across the valley without going through it.
Yeah, exactly. I don't know that there's room in the helicopter for everybody to get across.
I read an article yesterday, posted it, and basically it was saying one for the Bears and one for the Bulls. This was the chart they had up for the Bears. We show this double top here, and then we show these percent above 20 EMA dropped heavily, as well as the 50 EMA, and we even got a down tick on the 200 EMA stocks. So now to get full credit, I posted this in the middle of the day before this decline had started. So we did have the warning. It was up there. It's been up there a day or two anyway. The warning was there, and just you know,
Excellent.
today it came true for sure. Yesterday actually it started.
Yeah, it's always nice when those articles are that timely.
The chart for the bulls I covered also in another DPA, but when you see one of these long, steady moves up from deeply oversold to extremely overbought, that's a good sign. You know, it's a good sign that money is coming back into the market big time. And as you see, it peaked. The indicator peaked here, but the market kept going. and we have the same potential here, and we're not necessarily done. I think we are, but not necessarily. This kind of thing can be more powerful and it could go higher. But
Yeah. Well, there's that mid-year, what is it, August support level, and we're kind of sitting on that right now. So
yeah, yeah. Mainly, even though this chart was bearish, it basically took preference or precedence over the bullish chart because it's more, things are more immediate, and we had to work out this overbought condition on these indicators. And you can have this, you can have your cake and eat it too, because you get the bear action first and then you get continuation of the bull action. I'm not saying that's what's going to happen. It could, but I don't think that's what's going to happen.
yeah, and it was really overbought there because on that second top, we actually did have 100%. All of them had PMO crossover buy signals. I don't think I've ever seen that on the
Yeah,
S&P.
yeah,
So that was,
yeah, that was it was 100%. Yeah, it's never happened before. You
yeah,
know what? There's one other chart in that
so far.
series I wanted to show. Um, this going back on the crossover buy signals. Um, this shows other times when you've had these long pushes up, and we got one back here, didn't work. That one here didn't work. Um, and let's see, got one here, didn't work. So they don't always deliver what they promise, but it's one of those things. Depending on where you are in the cycle, of whether you want to believe it or not.
Right. It does have the earmarks of that '08 one where we were having that nice little rally off that low. And
Right.
yeah, it didn't work out. All right, let's
Did you want
see.
me to cover the um, FAANG charts? Did you
Yeah,
want?
go ahead. I want to show some of the ones from the pitch, and then I'll pass it
Okay,
back
go
to
ahead
you.
and take it.
Yeah, let me do that. One of the ones that the darling, I guess, if you will, that I really liked on the pitch yesterday, and like I said, it's airing today, was Beyond Meat. You know, I don't, I'm not big for their product, but a lot of people seem to be, and this chart really has started to shape up nicely. Now, of course, we just showed you that we have to take this in a bear market context, but it is in the consumer staples sector, which does tend to do a little bit better when the market's in decline, unless it's in a spiral downward like we had in March, but that takes everybody with it down the rabbit hole. But now we're starting to see some of these come back. This is really like a textbook cup and handle formation, and we got the breakout from that. And right now it's struggling at that Fibonacci 50% retracement line. But, and today we got that big back off on price, but you can see the rising trend is still pretty solid here. And, you know, I like the look of this chart. You've still got a very strong PMO. You can see rising bottoms on the OBV. Of course, a great scooter rank. So right now what I'm looking at when I do these in diamonds, I always put this little pink line in here, and that is a possible stop area because I don't like to get into anything without having my stop already in mind. And I was looking at this, I really like it. I think the only issue I really have right now is that RSI is quite overbought, and that generally isn't the best condition to buy into. But if we get the pullback and we get that RSI back a little bit lower, then I think that opens up a lot of interest here. So I'm still looking at this one on the bullish side, and I just wanted to revisit it because we did get a pullback today, and I think that's is definitely constructive for that chart. And then the other one I was going to show is a short, actually, that I'm going to present today in my, well, that I already presented in my diamonds report on Wednesday. And let me make this bigger because I want everybody to be able to see it. This is a possible short that I've been looking at. Actually, let me, well, if I do that, I think I don't know, I might lose my, oh, no, I did. I get my annotations. Okay, so this is one I'm looking at as a short. We've got the PMO. It did get above the 0 line. It's the second time it's topping, and now it looks like it's about ready to give us that sell signal. You can see the OBV tops are confirming. And what I saw was this reversal pattern, that head and shoulders pattern does have an up trending, let's see, it's sloping up the neckline, and consequently we did get a breakdown there. So I would still be, a little, paying attention a little bit. The stop, of course, this is a short, so I put it up here at that left shoulder. But honestly, if it were to break that declining tops trend line there, I would probably not wait it out for it to break down. But with the market already showing weakness, you can see that price is already getting into that oversold area below the net neutral. There's just a lot on this chart that I think is pretty ugly. And so I'm looking at that one as a possible short. And then when you look at the possible targets for it, right now we are sitting on some important support. I mean, it could hold up here. It could hold up. So that's why I wouldn't give it much room to run to the upside on this short. But even if you got down to this level, that's about a 12% gain. And of course, if we can get it back down to test its bear market lows, that's a 24% gain on a short. And you can see that the weekly is turning down. So I think that's also pretty ugly. So I'll be presenting, I just presented this particular chart in DecisionPoint Diamonds. It gives you an idea of what kind of work I do with the diamond reports, and you get these charts with those targets. And I also tell you when earnings are. I tell you, you get to look at the weekly chart like I just showed you. And I do 5 of those 3 times a week. So that's 60 stock ideas in a month for $25. So DecisionPoint.com, go check that out. But I'm going to pass it back to you, Dad, to look at some of those FAANG charts, because those are certainly looking interesting as well.
Okay, got it?
Yep.
Okay.
Good old Apple.
Yep. Here's an example of the failure to meet the top of the trend channel. It's actually a rising wedge. It challenged the line today, but it didn't break down. It actually had, the PMO had topped intraday. Amazon, definitely PMO topped, and again, it's an overbought PMO. Oh, notice the on balance volume. Here you've got new highs on the volume and a lower low on price. This is a blowout. This is volume trying to push it up, and it can't do it. And that's the reverse divergence.
Yeah, I think you can make a case for a double top there too.
Yeah, it's a little messy. And Facebook, again, PMO top today, and
might be time
kind
to
of, yeah,
might be time to collect the profits on that one.
right.
Because that, yeah, that's a breakdown of a parabolic, so it could definitely move lower.
Google, same picture, PMO top, and we do have the OBV issue, same thing. Block, OBV, and oh, I'm sorry, take that back. This is just confirmation. Never mind. Microsoft, PMO top, breaking down through the rising trend line.
Yeah. and it's overbought. Perfect territory for the last time on that PMO
Right.
turning down.
Right. Netflix, double top. There's the confirmation line would be right through here. And PMO has topped.
What kind of percent decline, if you could do the inspection tool, is that from to that support level? I'm just curious how far away we are.
Are you
Yeah, from where we are now down to, yeah, down to there.
still up from
Yep, so that's over 12, 13%.
yeah. So you want to go down. The minimum downside target would be about here.
Yeah.
About here, minimum.
Maybe that's a short. I actually, full disclosure, own Netflix. I think it's time to take my profit.
And here we go with Tesla. Kind of a shallow top. And negative divergence here on the volume.
Yeah, it hasn't quite broken down its rising trend, but if it's going to follow any of these other guys.
There's just a perfect breakdown of the rising trend line there. And again, PMO top.
Yeah, it didn't make it back up to the top of that rising trend channel. Same sort of setup.
Yeah, I should have probably drawn the line up through here. But yeah. You know, we had a request to for a to cover one of that's the wrong get to the right directory. Okay, somebody wanted us to cover JNK, which is high yield bonds, which is junk bonds. And I looked at the chart today and I thought, this is peculiar. This is junk bonds and this is the SPY. And then you look at correlation, they're just almost perfectly correlated. You don't necessarily need a correlation line to tell that, do you? But junk and then HYG, it's the same thing. It's just another ETF for junk bonds.
Wow. Well, it's been a great show. We do have to close it down for now. We will be back with you next week on Thursday morning. Thanks for joining us. We would love for you to like our YouTube video if you're watching us on YouTube, and go check us out at DecisionPoint.com. It's been great having you here, and I hope everybody has a good weekend, and we'll be seeing you next week. Happy trading.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.